Heidi ho, everyone, and welcome aboard to another Sunday market update. My name is Geoff Pine, and I'm coming to you from Tasmania in Australia, where it's getting a bit chilly, I've got to say. Winter has begun, and I'm sure all around the world we're noticing a little bit of a change in the climate. Not necessarily for climate change, but because we've changed seasons. Welcome aboard. It's nice to have you with us, and as usual, we'll have a look at what our traders are thinking about the week ahead in the markets. We're going to begin by going to Sydney, Australia, and saying a wonderful, warm welcome to Ainslie. G'day, mate.
Hi, Jeffy. How are you?
Oh, look, top of the world. Although we're at the bottom,
Yeah, well, I wouldn't call it a warm Sydney. I walked out of Singapore where it was a balmy 30-something and arrived into Sydney Airport and it was 8 degrees.
Sensational stuff. That'll wake you up.
It woke us up. That was like I was trying to grab that jumper really quick, smart. But yeah, what a week it was. It was a great week up in Singapore, I've got to admit.
Indeed, very, very busy, and as usual, a lot of information shared and hopefully grasped by a lot of people, myself included. Had a wonderful learning experience there, as always.
Yeah, no.
Although I was sitting here in Tasmania, by the wonders of technology, all that information comes. Gee, I was tired after it, I've got to say. I'm sure you guys were as well.
I was pooped in a couple of glasses of champagne in the Qantas lounge on the way home.
There you go. That'll fix it as well. Let's talk some trading, shall we? Gold is still struggling to get off its backside. What's going on?
I'm going to pop across to, and if you can join me on my little Zoom, I've just done this so that I've got a bit of clarity around what I'm speaking about. So here we've got a gold analysis for the week beginning the 5th of June 2022. I'm going to hop straight into my 4-hourly chart, my daily chart, well, left and the right. And what we've got here is definitely a situation of nowhere going fast. I think it's probably the fastest thing. I've hit the wrong key. Sorry very much. We basically ended where we started. There was not much going in there. We just went down, up and back again. You can see here on the daily, we're just moving into an area of consolidation, which just would indicate that we've just got some profit taking. Why are we going into that direction? And then let's have a look on the weekly chart. This one on the weekly is on the left and on the right is the monthly. So the weekly, just to further emphasize, we went nowhere for the entire week, is we've got an outside bar after having a really, really small inside bar that closed above the 50, but between the 50 and the 20 in May, everything pointing to the downside, everything just saying, we're going nowhere. The only thing that it's indicating for me, Geoff, is at the moment is that the decline that we have seen from that decline started on the 8th of March. On the 8th of March, we went from highs of 2,070 all the way down to below 1,800 down here 3 weeks ago. And that now has come to a bit of a pause in proceedings, and we're going to see what else is happening for us. So quick review. Saw gold close pretty much where it opened. The price action we saw on the weekly is indication that we've got nowhere to go at the moment. And on the higher time frames, it's clearly visible there is now a pause in the downward trend. On the fundamental side, for the week ending the 4th of June, we've seen the Fed remain confident about the economic outlook. So they are still saying, okay, we've got some inflation, but we don't have high unemployment and we don't have a lack of demand for our goods. So the stagflation argument is really not flying at the moment. As a result, bond yields are back up on the rise, and this could also mean the US dollar pivoting back higher. So we've seen it backwards and forwards. When these assets are on the rise, it means that gold is on a downward trend. So when we see the US dollar going higher and when we see bond yields, real bond yields back on the rise, this is when we're going to see gold coming back off the boil and heading down. So as I said, I just gave you the there was that term stagflation floating around in fundamental analysis over the last couple of weeks. But as I said, we saw a solid non-farm payrolls figure on Friday evening. So that confirmed the Fed's confidence moving forward. They're expecting it, a high inflation rate, but, we don't have the other components really in there giving it the irrits, as you would call it. So once we saw the bond yields going higher and the US dollar starting to pivot higher, no surprise, gold turned lower as well. So just to give you an idea, this is what I mean by when we've got 10-year real yield rates going up, and then you've got gold. Look, it just turns down. It's just the inverse correlation is just striking when you just put it side by side like that. The outlook for this week. One of the things that we really need to keep a lookout for is on Friday, 10th of June, CPI figures will be released. Inflation is still expected to remain high around 8.3%. However, and here I'll talk about it next in my next cross, is with oil at its highest since early March, inflation doesn't look like it's going to abate anytime soon. And oil is going to cause some pain for people who are not driving electric vehicles. It also will, in turn, possibly lead to a stronger US dollar and high bond yields taking the shine off gold for the time being. So that's the wrap on gold, Geoff.
Okay, mate. It must be frustrating for you to see it going up and down in the one spot all the week, right? And that's not, it's not an isolated situation.
Yeah, look, it's not isolated. It's not the first time. Look at the previous week. I just flicked back to the 4-hourly chart on the previous week. There was a bit more volatility, a bit more dance in its pep in its step, if you like, but it just did the same thing. The previous week, it almost opened where it almost closed where it opened. And this week, it's done exactly the same thing. It's just the way it is. And we're just going to have to ride this out until a few more bits and pieces fall into place. The Fed has a clearer idea of what is happening. The US dollar is, I need the US dollar to devalue, and I need real bond yields to come off the boil, because the inflation story, gold being a hedge for inflation, it's not helping. It's just not working. It's not stepping up. We're not seeing that as a proviso. But you look at it for the last 2 weeks and you're just going, well, okay, here we go again. Seasonality is not going to kick in until later in June. And unless we've got some really dramatic changes going on, we're just going to have to sit there and be really patient for something to take off.
Interesting, your comment there that it's not doing as you would expect it to do, seasonality notwithstanding. Do you think that's a sign of the times, or is it just an anomaly?
I think it, not necessarily an anomaly. I think it is where priority is given, where people are interpreting the market and the long-term effects. And I call long-term effects, God knows what. Nobody knows what's happening down the track. But where people are thinking, you look at from the technical point of view, just look at how flat the EMAs are on the 4-hourly chart and the daily chart. I mean, we like to see them like we do in the daily chart. Look at that, where they're all in order and they're separating and spreading wider, and then you see really good, strong price action. That's what we like to see. This at the moment, on a technical point of view, everything's flat as a tack. People are just going in and doing, you can see short-term trades just going in and out of the market, but nothing, neither the bulls or the bears have got any kind of weight behind them. Where it will change, what is the driving factor? Who knows? Like I said, a couple of weeks ago, there was all the arms up and about, we're going to see recessionary overtones, we're going to see stagflation issues. And stagflation needs 3 things. It needs high unemployment, persistently high inflation, and a lack of demand for the economy's goods. And we don't have all those 3 things. So that theory was thrown out. What's the next thing that's going to come along? Who knows? Who knows at the moment? My bigger one.
Asking the wrong bloke.
Yeah, my bigger one at the moment is and we'll go to it after George's cross, is oil. Oil is.
Yeah, interesting. It's taken off, looking for that new high very, very shortly coming up, one would suspect.
Yeah. So
Sorry.
I'm just going to say we'll deep dive oil. We'll slice and dice an oil chart next.
Okay, that will be faster than you think, because we're having a bit of a problem with George's video. It's telling us that we need a new codec, which is interesting. But before we do that, I just want to have a quick look and see what's coming up in the week ahead. Of course, tomorrow we have all sorts of things. Hopefully you can see.
We can. We see
my screen. Awesome. Most of those things are bank holidays, and that's because Lizzie turned 96 sometime this year or whenever it was. And of course, if you live in Britain, you'd know all about that at the moment, or if you're a Commonwealth country, you'd certainly know all about that at the moment with her 70th Jubilee. My goodness gracious me. And if you had, did you see the Paddington Bear thing? I thought that was great.
I did. It was gorgeous. It was gorgeous. It was right up there with the James Bond skit that they did for the Olympics as well. So
yeah, it was pretty cool.
It's good.
So that's kind of that will probably disrupt tomorrow a fair bit. But then, of course, it all begins with the RBA on Tuesday with the what they now call the cash rate, and everyone expecting that to go up by. Again, we're different in Australia. We go up by not by 0.5s or 0.25s. They're expecting 0.4s. Hello.
Picking up, we want to be different.
let's go with 0.4, shall we? We're expecting to go to 0.75 anyway, and that could be, well, it's almost a given that that's going to happen. One would think. The Aussie, of course, is not doing too badly at the moment. I don't think that will hurt it. I don't think it'll affect it too much either, to be fair. Unless, of course, they go to 1%, that might make a difference. We'll see. Nothing happening on Wednesday. Sorry?
I was just going to say that mortgage increase. Can you remember? And I'm now showing my, I did read about it in a book, when interest rates were around 18%. Yeah. I
was paying them, don't worry.
Yeah. Yeah.
My first house purchase was in 1981, I think it was. And yes, that coincided with 18%. Oh my God, how long's this been going on? What did I do this for? But it turns out to be the right thing in the long run. So after the RBA, there's bugger all happening on Wednesday and Thursday. Of course, we do have the ECB with their, what they call, main refinancing rate and their monetary policy statement, which of course is the most important thing out of that. They won't move from 0%.
Sorry, Geoff. Sam's kicked you off the share screen, I think, because I can't see your screen.
Okay. Look, that's okay, because she's just trying to get George's video up and running. Okay. And she needs to kick me off. Sorry, Sam, I should have known that. Anyway, we're still going through next week, which is interrupted by bank holidays. Nothing happening on Wednesday. ECB press conference on Thursday. And we have unemployment rates coming out of Canada, and of course the all-important inflation figures coming out, or CPI figures coming out in the States on Friday. We'll see how that rolls when the time comes, of course. Right away, that black stuff, that's called black gold. Let's have a look and see what's going on with that. As you say, has taken off and looks to be going towards the new high.
Okay, let me just start that. Okay.
Not sure Sam's had enough time to do that, but let's see.
Is that okay?
I'm not sure, but let's try.
We're going to have to. I am screen sharing. That's what it's told me. Okay, so let's have a little look at oil, shall we? I'm just doing a quick comparison because it was a really volatile week in oil, and it previous week, and obviously the week that I was meant to be doing at the trading retreat, doing oil, it was in a decisively tight range right up until the Thursday evening after we came back from dinner, and then it popped. But there's been plenty of volatility right throughout this week, and we've closed above $120 for the first time since early March. Okay, and that was the spike that we had when early March was in response to the Russian invasion of the Ukraine. So on the daily chart, price action retraced back to the monthly pivot and the 20 EMA, which was a combination, and duly bounced, providing a setup on Friday morning after a 3-bar retracement on the 4-hourly chart. And we can see on the weekly and monthly chart, that provides a clear picture. The upside is still in play for the time being. So let's have a look at what happened. We had a retracement back down, and on the right-hand side, you can see there was a bounce off the monthly pivot that coincided with the 20 EMA. We've got the DI plus above the 25 line. We've got the ADX well above the 25 line, and the MACD above the signal. So everything was pointing upwards, and a strong move to the upside on Thursday. What I was looking for was a breakout of the mishmash. Now, this mishmash, as you can see, compared to the week before, which was just flat as a tack, and then there was pop, and then a further consolidation or accumulation of the asset. But here we have been all over the shop. You can't quite see the volatility on the daily, but if you drill down onto the 4-hourly chart, boy, she was all over the place. Now, why was she all over the place? And before I go there, I'll just go back. The fundamentals. It's been a roller coaster. We had China coming out of lockdown. That sent oil prices up initially as dormant demand was expected to fire back up. Now, China is one of the largest consumers of crude, and that's why China coming out of lockdown and things starting to crank back up in China was going to have an impact. Also, we had OPEC Plus increased its monthly increments. Now, we've been talking about OPEC Plus having the fastest meetings of a month where they just agreed blindly for the increased incremental increase of 432,000 barrels per day of the entire OPEC countries. And that was to keep it under control, so they didn't flood the market, that they had that situation going back to when all the countries went into COVID and lockdown, and demand disappeared and supply was onerous. And we saw that horrible scenario where oil went to zero. Actually went lower, but we won't go there. Now, they have actually sped up their schedule, which was to see July and August having an increase from the 432,000 barrels up to 648,000. Now, interesting, why that needs recognition is we saw oil come back down, and because it was an increase in supply of oil. But what then happened to turn things right around was before the news of dropping US oil inventories, combined with the EU's decision to ban Russian oil imports. Ta-da! And then we've got a bang-on horrible combination of why the supply was being choked. The other thing that was a big thing was that, and it just was one more foot on the throat for Russia for exporting its oil to whomever was going to buy it, was that the EU finalised its prohibition of financing and financial assistance services for Russian oil cargoes, i.e. no insurance on their trading, on Russian trade. Don't you think that stopped? And Russia is also struggling just in general to supply its previous levels as it continues to fight Ukraine. So we've had an incredible week. I'll just flick back to and you can see the movement. Click back to the chart. Look at this movement backwards and forwards. The previous week, look at the size of the bars. Nothing was happening. It was consolidating, had a pop up when they thought China was coming out. And then there was OPEC releasing more oil into the market, and it came down. And then bang, we've just had this horrendous move right back up, and a really strong move up after the US job numbers on Friday night as well. Just kept going. So yeah, you can see there quite clearly that was a really good move. But let's just have a look at the next slide. And can anyone see? I mean, we're starting to get nosebleeds here with the move, Geoff. It just doesn't abate. It's really respecting. It's only back in December, where, by the way, December is that move down there on the weekly. That last quarter in 2021 is a seasonal trend where oil retraces and declines anyway. That's quite a seasonal move. But to see what we've seen here in the volatility, you can just compare the size of the bars and the movements that we're getting every day and every week is just phenomenal in relation to what's been happening for the last 2 years. So let's just move to, we've done review, we've done fundamentals, outlook. Now, I really do think we're going to see continued pressures on the supply side of oil. With China opening up, that's going to increase demand. And we all know what happens when supply becomes a little more restricted and demand outstrips supply. So I think we're going to see more upward pressure on WTI and Brent. The daily bar closed on its high. So like a good technical analyst, I'm going to look for a little bit of profit taking and a little bit of a retracement before I see another setup for the long side. So going ahead this week, beware of further volatility, but my bias is for more to the upside.
Yeah, a little bit tough to jump in if you're not in already, of course. That retracement thing is what you'd be looking for next if you're not in that at the moment, one would suspect. Yeah,
so we saw a nice retracement on Thursday, as you can, I'll just pop back here, but you can see that nice little they call it the, what is it, 3 stone crows or 3 black crows, or no, stone crows is a, oh, that's a band, isn't it? Yeah, 3 stone crows. Or hub and crow's nest, can't remember. Anyway.
Something like that.
Something like, but you can see that very neat technical setup, and then you got the nod to go ahead with, you know, your MACD above and your DI plus starting to head north, and you know, look at it, it's not coming back down in a hurry. That's a really strong, decisive move to the upside, isn't it? So yeah, if you haven't filled up your tanks, just don't start having a heart attack when you start paying over $2.19 to put the petrol in your car.
Hey, look, I live in Tasmania. We've been doing that for ages.
Oh, look, I'm downtown Sydney. I'm not that far from Kurnell, am I? But hey, it's tough. It's going to be tough, and that's obviously.
What did you say? You're not far from Kurnell. You nearly said it.
Oh, I mentioned it. I don't know why I did that. Sorry. Yes, obviously, increase in price in fuel is going to have a flow-on effect across the economy and logistics and chain supply and all that kind of stuff. We're going to start seeing it hitting the hip pocket in a lot of things.
Yeah. Inflation's not going away anytime soon. That's
no. So that's what I'm saying. You slice and dice this. You have a look at this oil chart. Don't be surprised with the CPI figures that you see on Friday.
Indeed. Gee, fully good news, Ainslie.
I know. Gold's going nowhere and oil's just going up, and it's going to cost you an absolute bucket load to fill up your petrol tank but as traders, you can spend more time at home in front of the chart.
You can offset that by buying oil.
You don't need to be driving anywhere, because now you can be trading something because you've got volatility. We like a bit of volatility, not quite as much as that we've seen, but you get on a ride and go for it, and it's all good.
Yeah, can't do much without it. That's a fact.
That's true.
All right. Look, I've been like a duck on the pond, thanks, and I've managed to convert George's file to something that we can actually use. So here he is. Let's say good day to our good friend George. Talk to me, George.
The power of measured moves. Now, if you master measured moves, you'll get a higher probability of knowing where the market is likely to go. First candle of the day, UK 100, big bear trend candle, measured move up here, market eventually got there. Then the market pulled back, first leg, that's another measured move, first leg, pull back, we got to a measured move, eventually we got there. Market created a converging triangle, which is a breakout mode. And when the market broke out beneath this low, the measured move was here. Now, I've used line closes, which I tend to also use when I am in a trading range. Now, line closes, built on closes, there's a high, there's a low, there's a measured move. Similarly here, line closes, measured move, high, low, and you can see the market got there in both instances. Then we had a bit of a wedge here, but you can see where the wedge ended. Again, a measured move of this tight trading range. So if you're looking for a way to get into the market, perfect entry right here, jump into it. Now, the market then, again, measured move, trading range, this high, this low. You say to yourself, the bulls are strong enough. They want to create a measured move, which they did. They got up to there, which is also a double top. So exit your longs. If you're not in any trades, sell beneath here. You want to get down here. But you also say to yourself, hang on, if the bears are strong, they want to get to a measured move of that trading range, that high, that low, and there is a measured move where the market eventually got to. Another one of the measured move, expansion, use the Fibonacci expansion, leg one, there's the first leg of it. There is a pullback. We didn't get the full extension to the second leg. Second leg is also the same height as the first leg after the pullback. It ended right here, but the bears would have wanted to get there. So just leave it in. You can see where the bears want to go, because there could be bears who've taken a trade here with a wide stop waiting for the market to get there. In any case, perfect reversal here, beautiful entry for you to go long. And your objective, first objective is to get here, but then you also say to yourself, the bulls are strong enough to break out above that high. So that will become a trading range, that high, that low. If we break out above that, you'll be saying to yourself, the bulls would like to get to that measured move. They didn't. Just a test of the high of yesterday, which is just short of the high of May. So, and the bears came back into the market defending this level of resistance. So if you are in a long trade, you exit as soon as that bear candle closes. Beautiful entry here. One of our strategies that we trade, jump in short, sell here or sell here. And you're saying to yourself, hang on, if these bears are strong, now I have that original trading range. If the market breaks out beneath that, that's where they want to go. Or another one that you could just plonk in, that high, that low, the market breaks out beneath this new trading range. That's the objective for the bears to get there. We have a breakout. I prefer to manage my trades. So hang in there, measure move of the breakout. There is where the market turned, take your profits. Again, another measured move, the expansion leg one, pullback leg two, exactly at that point. So you take your profits, you exit. If you are quick enough, inside candle, beautiful setup, take it and see what happens at the test. Take out, get out of your profits, take your profits there. Then we also have decent enough sell signal here, test of 50% midpoint of yesterday, open of the day. Jump into the trade here or here. Your goal is to get here, but you're also saying, hang on, if the bears are strong, they want to get to a measured move, and they got to the measured move. Then at that point, reversal, you can get out or take your profits, get in bull entry. At that point, you're hoping to see if the bulls are able to put a measured move. They didn't. Market reversed here, get out, bank your profits. Then, I mean, the whole process carries on with a measured move of the trading range. That's the measured move that we got to. Then we got a breakout. There is the first leg, pull back inside candle. There is a measured move. Height of the breakout candle is here. Market reached a measured move. If you use measured moves, guys, the potential is to make a lot of money. Again, name is George Nyabadza. I'm looking forward to seeing you this Wednesday. Wednesdays at the market with George. 8 hours in the market will really can explore all of these things. So the access to Wednesdays on the Wednesdays at the market with George is on the ATW page. So jump there, book, Zoom registration compulsory. See you on Wednesdays, guys. Thank you.
Thank you, George. Yes, we will catch up with you on Wednesday for sure. Not sure about the 8 hours for me, I've got to say, but those of you who have a good supply of no-dos or something similar, you can join George. No, don't do that. Not advice. This is not advice. Guys, that's our show for the week. Thank you for being here and enjoying our company, or us enjoying your company. It's been somewhat of a bit of a battle for me trying to get that video up, I've got to say. But thank goodness we got George in here. You can also see George tomorrow in Trading Buddies, where you can join Ash, myself. Simon's coming on to talk about cryptos tomorrow as well. And George will show us his 5-minute stuff and see if he can give us a trade as well. Ainslie, thank you, mate. Hope this week.
A week? Yes, good week trading. Let's see what happens with oil. That'll be the fun one to watch.
Okay, we'll have fun then. Everyone have fun. Have a great week ahead. Thanks for your company. Bye-bye for now.